how high can Bitcoin go during this rally? Yesterday, I talked about a breakout from a 4-month trend line and also that break above $23,000. So far, the market is holding above that. So how high is Bitcoin likely to go here over the coming days and weeks? What are some targets to keep in mind? And also, how do I think the market could react once it gets to a certain area and why? I'll discuss all of that in today's video. And if you guys do enjoy these videos, be sure to subscribe to the channel and click the bell icon to get notifications so that you don't miss out. Okay, so let's go ahead and take a look at Bitcoin here on the daily time frame. And in linear view, you can see that this is the trend line I discussed yesterday where we saw a breakout from BTC just the other day. Okay, so we saw the market break from this level here, and so far it is holding above that confluence of what was resistance around 23,000. It has flipped that to support. So yesterday's session closed above this level. All right, so you can see we got the close above here and retest right on $23,000. So spot on, right? That's exactly what we want to see for this move higher. Now, where is Bitcoin likely to top out here over the coming days and weeks? Well, first and foremost, I want to talk about something that is not on the chart, and that is the upcoming FOMC on July 27th. So we know that the Fed is going to have to be rather aggressive given the recent inflation numbers, right? Over 9% year over year inflation. We know they're going to have to be a little bit aggressive. It just depends on how the market reacts to that, right? Does it sell off initially and then rebound, or vice versa? Does it rally at first and then sell off later in the day? So as I always say, I'm more concerned with how the market reacts to market news like that versus the market news itself, right? Whatever the Fed does not matter. The only thing that matters is how the market reacts. That's going to tell us whether the market says, you know what, it's priced in, we're okay with it, we're going to move higher, or you know what, they're raising rates way too aggressively and this is not priced in and it's going to sell off. So I'm more concerned with how the market reacts to it. So July 27th is going to be key, right? Again, it's not so much what the Fed does, it's where the market closes on that day. So with all that said, let's take a look at where Bitcoin could be headed here over the coming days. So we know July 27th is going to be a date to watch. But as far as key levels here for BTC, and this is what I talked about yesterday, how everybody was watching for a breakdown from this pattern and even trying to sell a resistance up here, just like previous times. And this is exactly why I titled yesterday's video to do not short Bitcoin, right? So far we're getting that move higher. Now, one key level to keep in mind is going to be the May low right back here. So this candle wick, this comes in right around like mid 25, maybe right around 25,300 or so. So that's going to be one level to keep an eye on. Now, Bitcoin rarely reverses from a single wick like this. Okay, so this is not the strongest resistance level that I would keep an eye on. Instead, I would be watching for this area of consolidation, the bottom of this consolidation. So right around like 28 to 29,000. Okay, so this is the area that I would keep a very close eye on over the coming days if we do get that rally. Now remember, July 27th is going to be one to watch, and that's exactly a week from today. So not a lot of time for BTC to go from 24 up to 28,000. Of course, we know it can do it though. It's Bitcoin, right? We know it can do it, but can it get up there before the 27th, or do we see that last bit of the rally after the 27th? So that's going to be something to watch. Now, as far as confluence goes, and this is what I always like to look for, it's not just about a single key level in the market for me. I never just look at, 28,400 or so and say, okay, I'm just going to short from here. I don't think that's ever a good idea. And furthermore, Bitcoin rarely reverses exactly from a level. Okay, this market loves to overshoot these levels. And what I mean by that is instead of a perfect retest off of this level here, or even this wick down here, the market loves to come above this area and then fail. Okay, and that failure is what you want to look for. I made a video a while back on how to trade these fake outs. And this is something that I do often. Okay, it's one of my top strategies that I use because it does give you that confirmation of a reversal, and it also gives you an invalidation point from where you can hide your stop loss. Okay, so let's talk about confluence here for a second. So it's not just about one key level like this. So what I'm gonna do here is I'm gonna turn on visible range, which I believe this is part of the TradingView paid plan service. So if you have a paid plan with TradingView, you can access this indicator. And what this does is it shows you how much volume occurred at certain price areas. Okay, whereas the volume you get down here at the bottom of the chart typically, this will show you volume by time This over here on the side shows you volume by price. And markets love to retest these areas where you get a lot of volume. Okay, so if we look here at the last few months, you can see that Bitcoin has three very distinct areas of high volume. And this makes sense because this was during the consolidation back here, right before we got the breakdown. This is pretty much the midpoint of this consolidation. And then of course we have the midpoint of the recent consolidation. So what I'll be looking for from Bitcoin is not only 28,400 or so, but also this area up here right around $30,000. Now, this is the mid-range pretty much of this consolidation through here. So there is a good chance that if Bitcoin is going to reach 28,000 and then fail, that we do get a move just above 28 up here toward about 30,000 or so. And then that's where the failure occurs. Now, there's no guarantee of that. Bitcoin could break above 28,400 and then flip this area to support and just continue higher, right? No guarantees, but if we were to get a retest of 30 and then a close back below this area right around 28,400, all right, the bottom of this consolidation, that would confirm a fake out. Now, obviously, we're talking about levels that aren't anywhere close to today's prices. So this is in the event that we do see further upside for Bitcoin. Now, let me throw in a few other factors here as well. So looking at log view. All right, if we move out here to the entire range from the all-time high to the recent low. So this is something that I love to do. Not a lot of people do it. I personally think it has a ton of uses. Fibonacci's on their own. Yeah, they can be useful, but one single Fibonacci from one range doesn't really tell you a whole lot. I think that what is a lot better is to use multiple ranges, okay? So if we take these two ranges, very significant ranges for BTC, we have the all-time high up here, down here to the recent low, and then we also have this high during this consolidation. Again, a very prominent swing high here for BTC, and also the same low. If we do that, you can see that we do get two key Fibonacci levels, the 382 and the 50%, which isn't technically a fib level, but markets do love to retest that 50% level. So you can see that both of these levels line up right there around $30,000, maybe just below. So we have one right around 29,700, the other right around just above 29,000. So this area up here, once again, as we said, okay, looking at the visible range, this lines up exactly with, look where these two fib levels are, right there with that heightened volume during this consolidation. And that's not a coincidence in my opinion. Again, if we do see Bitcoin rally that high over the coming days up toward that $28,000 area, I think there's a pretty good chance we get at least a test of 30,000, maybe just below it, before we see some real selling pressure. Now, keep in mind too, that the area just below 30,000 may sound familiar, and that is because it's the bottom of this massive range for BTC. Okay, so January 21st opened right at about 29,700 or so. So if we mark that level here on the chart, you can see that we have these lows back here. We have the lows through this area. Everybody remembers the summer of 2021, right? This was the bottom of that. And that lines up right here with the midpoint of this consolidation, okay? Which again is also where the VPVR, okay, what used to be called the VPVR, comes in right here around 30,000, and also those Fibonacci retracement levels that we just looked at. So I know that's a lot to take in, but keep all of this in mind if we do see Bitcoin continue this rally. And the S&P 500, remember, has to stay above 3,900. I talked about that yesterday. But as long as those things occur, Bitcoin stays above 23,000, and we do see that move up toward the $28,000 region, then I think the $30,000 area, maybe just below it, is going to be one to watch. No guarantee that Bitcoin reverses from there, but I do think we see a very strong reaction somewhere between $28,000 and $30,000. All right, so that's it for today's video. I hope you enjoyed the content. If you did, be sure to smash that like button, subscribe to the channel, and click that bell icon too to get notifications. And furthermore, if you do want more of this content, be sure to claim your free trial of Crypto Academy. You're going to get access to the daily newsletter, the videos, and the private Discord where I'm active every single day. So you get 7 days for free there, no credit card required. If you love it, you can stay on. If you don't, do nothing and you won't be charged. All right, so that's it for today's video. I will talk to you guys again tomorrow.